There we go. Welcome everybody. Just drop in the chat there. Working on me. If you're hearing the sound of my voice, just put working on me. Drop a 441 in the chat if you're seeing the disclaimer. And let me know where you're calling in from as well. Okay, drop a 441 in the chat if you're seeing the disclaimer. And let me know where you're calling in from as well. We're going to get ourselves started shortly. Working on me. Just type working on me. You're hearing the sound of my voice. Type working on me. All right. London is in the building. Welcome. Atlanta is here. London. Trinidad, Kenya is here. Welcome. Welcome, welcome, welcome. Everybody. What a week it had been last week. In fact, we didn't really have to do that much to be in profit this week. We didn't really have to do that much. Essex, welcome from Essex. In the UK, welcome. Atlanta, Georgia, welcome. Welcome, welcome, welcome. All right. So let's get cracking with this one because it's gonna be a nice one. Okay. We had some very interesting news. Let's pull up the news. Let's pull up the news. Let's see what happened last week. All right. And the main culprit was actually there was some Chinese news, there was some US and some GDP news. Okay. So let's have a look here and see what was going on. So last week, early in the week, some CHF, all right, a little bit of Australian news. But we weren't too concerned about that. The one that we were really concerned about is this CPI right here on Thursday. Okay. And then we had the British pound. Now there's another. Let me just filter out here. China. I need to put China on here. And China is important. And you'll realize why it's important for us in a minute. Right. So China had the balance of trade. Okay. And China had the inflation rate. Okay, those are important to us, and we will always keep China here. Actually, those are important to us because what is happening in China affects the Australian and the New Zealand economies. Okay, so we had done some fundamentals based on this Chinese balance of trade and applied that to the NZD and to the AUD. And we could see here the NZD, which we were looking for a sell-off since the week before on August the 4th, Friday, August the 4th. This was non-farm payroll day. This big spike up here was non-farm payroll, but you could see it came all the way back down, and then it tapped into our zone. In fact, our trade was really up here, where price tapped back into that, and then it dropped off. Okay. Then when we had Thursday, August 10th, let's go to August the 10th and see what's going on. All right, so that was the CPI figures, right? So CPI for the US came out. And remember, when we're trading, we're always trading. And let's let some people in here. right? Whenever we're trading, we're always trading one currency against the next. So we always need to figure out what is happening in each economy first to get a sensible trading decision, right? And the CPI just spiked things up. All right, the US had bit of a negative CPI, which inflation figures. And it was a temporary spike to the upside, but overall, the U.S. economy has actually been doing well, and we've been selling this off for a little while because the U.S. had been getting stronger, and that's exactly what happened. So, right, it took a little while to get to a take profit target too, from since we were looking for this sell since Friday, the 4th of August. However, with a little bit of patience, and this is the key, one of the keys in trading, it is patience. Gotta be really, really patient. And you're not trying to catch every up and every down and every across. We just want to get the major direction and stick to that direction and let it play out. Risk your 1%, your 2% of your account, or if the trade is a surety trade, then you risk a bit more. More on that in risk management and optimizing your trading. But there we go, right? So this was a nice trade. We didn't have to do anything because we were already in the trade for ourselves since the week before. So it's just a matter of managing, accepting the risk of the trade, not being too much in a hurry to put your stop loss into profit, or even if you had your stop loss in profit here after it pushed down here the first time, and you might have gotten stopped out, you get back into the trade, okay? The one that we actually got stopped out of was the AUD USD. Okay, so we got stopped out of that. We were looking for the sell here, but that's CPI did spike the market up a bit more than it did on other assets, and we got stopped out, right? But again, there was a possibility to get back in if you were looking at the trade. If not, dust yourself off and we go again. GBP USD, same thing. And again, we were looking for these sells since the week before, so we didn't really have to do that much. Again, GBP USD, we had a bit of a liquidity hunt here. Right, we had a liquidity hunt above these highs. Right, but you could see where whenever we have these highs, a liquidity hunt right back to our command contour level right here. We just put a arrow so you can see. All right, so this command contour level right here, price came right back up to that stop hunt and then continue dropping. And I mean, even if you missed that move on Friday, we actually got into a sell on this command contour level right here to the pip, hardly any drawdown, and it is moving in our direction as we speak. So we if you're still in the trade, we held it over the weekend in 40 pips of profit right there. We're looking for the US to remain strong. The pound had some, right? The pound had some generally positive news, right? It was better than expected in terms of the GDP growth, but that doesn't mean that that is actually going to make the pound stronger, right? We have to think of, okay, well, we do have the growth here, but it would actually slow down from this time last year, okay? It was less than it was this time last year. So it's slowing down a bit. So it ended up being a bit of a negative for the pound. And I think it will continue being a negative for the pound. So personally, if I were you, I would continue, I would personally continue selling the pound, right? We're looking for a good entrance. And again, this is where our command contour levels come into play. So all those with the command contour will be able to find your entries nice and sweet, right, to get in on the play to the downside on this one, right? Euro USD. Similar again, all right, very similar, although there was quite a lot of sideways movement on this Euro USD. We'll have to dig in a little more into what's happening on the Euro side of things. And in fact, let's look at the calendar for this week coming. All right. All right. So this week coming, oh, that's interesting. We have GDP for the Japanese yen that's going to happen on Tuesday. Okay. So keep an eye on that. Tuesday, Japanese yen figures. We have the CPI for Canadian on Tuesday as well. We also have the unemployment rate for GDP. So that's gonna shake things up on the pound, right? GDP USD. Right. So essentially for the past week, 2 weeks, the pound has really been sideways, right? It hasn't really trended anywhere. I'm looking for it to drop off. Unemployment rate, we will keep an eye on that because these figures are important, especially for the US, because they would feed into the non-farm payroll figures for the next month. So keep an eye on that. And we do have inflation rate on the GB. So Tuesday, Wednesday, Friday, okay? Tuesday, Wednesday, Thursday, Friday, because the balance of trade for the JPY is important. These jobless claims will be interesting as well for the US, right? It kind of tells how many people are still in work and how we could assess how investors feel about whether that is going to help with the inflation and how the overall economy is doing. Okay. Also, we had a nice trade on gold. Okay, we've been basically selling gold for the last, right? So we started selling gold way here. Again, this was non-farm payroll. And again, you could see here, it reverted to our command control level right here. Beautiful. Right, little to no drawdown. And we've been down. Now we got in on this trade. This was the CPI trade, and it pulled back really, really strong. But again, you could see pull back all the way to command control level here. And then it continued dropping off. So I know a lot of people are still in profit on this one. And then even if you missed that one, look, it came back to command control level right here. Okay, came back to command control level right here on Friday, and then it dropped off. Right, so I know a lot of people in profit on that as well. So we're looking for this for continuation to the downside. Okay, unless something dramatic happens. And remember, anything could really happen in the market, but overall, the figures that we're seeing is telling us that the US is getting a little stronger. So therefore, we should be looking for movements to the downside. So let's do a little bit of an interaction right now. Let's be slightly interactive. I'm gonna ask you a question. This is a very important question that I've asked a lot of people. You know, there's no right or wrong answer, and it's not meant to make anybody feel foolish or anything like that. Okay, so what are some of the things that you could do to blow your trading account? You just name one thing that you could do to blow up your trading account.
Over leverage.
Don't be shy. Anybody?
Wrong outside.
Somebody says scalping. Okay. All right. Somebody says over leveraging. For sure.
Misinformation when you're reading the news wrongly.
A wrong lot size. Yep, yep. No stop loss. Being distracted while trading. For sure. I like the no stop loss one. All right. Anything else? Anything else? Over trading and putting too many trades on. Somebody says greed.
Greed.
Okay. Over trading, too many pairs, too many entries, especially the same currency pairs. Anything else? Comparison to others. Now that's a good one. That's a good one. Anything else? Anything else?
Having a gambling mentality.
FOMO, the fear of missing out. Yep. Anything else? Anything else?
A gambling mentality.
Anything else?
Yeah.
Not knowing what you're doing. So lack of knowledge. Lack of knowledge, not knowing what you're doing. That is very true. Anything else? Anything else?
Not checking the news.
Gambling mentality. Okay. Yep. Not checking the news.
Chasing a trade after it's already gone.
Okay. Not quitting when you reach your profit targets. Wow. Yeah, that's a good one. Right? You've made your profit for the day. You didn't close your trading station. You kept on trading. It's basically over trading, right? Not quitting when you've reached your target. Take your profit and come back another day. Okay? Not securing your profits and moving your stop loss to break even. So this is trade management. Okay? So this is trade management. All right, very good. Very good. I'll give two more, and then we'll come back to an exercise. Two more. No discipline. Right? There's basically not having a plan. Or having a plan and not sticking to it. Having a plan and not sticking to it. Now I'm going to teach you a trick today that I believe is going to help you. One more. Last one. Who's going to take the last spot? Last one. Last one.
Revenge trading.
Not taking trading as a business seriously. A very good one. Okay, so we have here scalping, over leveraging, the wrong lot sizing. All right, no stop loss, trading distractions, over trading and putting too many trades on, greed, right? Comparison with others, fear of missing out, not knowing what you're doing. Some people with gambling mindsets, not checking the news, not quitting when you reach your take profit target, not securing your profits or moving your stop loss to break even, no discipline, not taking trades as a business seriously, and holding on to bad trades for too long, right? Basically, you haven't yet learned how to eliminate the big losses. And in fact, that's one of the first things that we need to do, eliminate big losses. Because it's okay to have a loss. You just don't want the big ones. All right. So the way to overcome all of these, right, is to actually become a trader that just doesn't do any of these things. And the only trader, right, the only trader that doesn't do these types of things is a good money manager. Right? Let me repeat that. The only trader that doesn't do these things is a good money manager. So therefore, right, before you even come to your trading desk, you've got to ask yourself, what, right? You need to write this question down. Write this question down, because this question is going to change the whole game for you. If you ask yourself these questions enough times, when you're just about to sit down to trade, when you're just before you hit that trading buy or sell, just before, right? And even when trades are happening, when you're managing your trades, ask yourself this question: what would a good money manager do? I hope you got your pens and paper, because that question, you need to stick it in front of your trading desk. Okay? Before you do anything regarding trading, you have to ask yourself, what would a good money manager do? Because essentially, that's what you're doing. The first thing that any new trader coming in needs to learn is actually, how do I preserve my capital? Capital preservation is the first thing that new traders need to learn. It's not even making money. You've got to master the art of protecting your capital. And the only way to do that is to prevent the big losses. And of course, you need to have a strong strategy. And of course, you need to have, you know, an understanding of the markets. And of course, you need to manage your risks appropriately, manage your trades appropriately. Okay. But always ask yourself the question, what would a good money manager do? Okay. So you're about to take a trade that you believe lines up with your strategy. Okay. You're about to take a trade, you believe that, right, is going to go in a direction that is going to flow. I'm going to ask you the question. Just before you hit the sell button, all right, okay, so we're going to take this trade, right? We're going to take this trade where we're going to enter the market at this point, right here. Let's just go back. All right, we're going to take this trade. We're going to enter the market at this level for the sell. It's going to ask the question, what would a good money manager do? Anybody?
Calculate the risk to reward.
Don't be afraid. There's no wrong answers. Calculate the risk to reward. Exactly. Exactly. Calculate the risk to reward.
Don't try to rush to get in the market.
If people are talking, I'm not hearing you. If you're talking, I'm not hearing you. So you might. Oh, you know what? I think I know what happened. I think I'm connected to Bluetooth somewhere. Hold on. 2 seconds. Um, 2 seconds. Sorry. If I am, yeah. All right. Okay. So if you were talking, I'm not hearing you. So I should be hearing you now. Okay. So the first person says, all right, calculate your risk to reward. Yes. So that is solid, right? The second person said you enter or you place a pending order using the right lot size, yeah, which is down to your risk management. Somebody says, don't rush to get into the market, right? Be able to welcome loss. Well, the fact about the matter is, if you take a trade, once you take a trade, you have accepted the fact that potentially is going to be a loss, right? Once you've taken a trade, you should, let's put it this way, you should have accepted the fact that potentially is going to be a loss. And this is where your risk management, right, come in. So therefore, you're not exposing your account to that much risk, okay? You're not exposing your account to that much risk, right? 1 to 2% of your account on any one trade. That's what a good money manager will do. Somebody who's trying to come in to pay their bills, the next day, right? They will come in and they will put the craziest lot size they will ever think and do all sorts of madness because they're not thinking as a good money manager. They're just thinking of someone who wants to come into trading to make a load of money when we're trading to be the last man standing and not the first to 1 million, all right? You're trading to be the last man standing and not the first to 1 million. I'll give you a story. I have a student who came to me. She was trading for 20 something years, over 22 years or something like that, 22 years, and had not seen a profit in 22 years. Had not seen a profit. And came to me to try and figure out. So I tried to figure out, okay, so what were you trying to achieve in trading? And it was trying to make some ridiculous amounts of money while trading. And here's the sad part. She could have actually made ridiculous amounts of money if she just took her time and built up the account over that 22 years. And because of the poor expectations, after 22 years, there was nothing. So you got to let that sink in for a little bit. Because if you take your time and have a bit of a long-term view of this game, then you should be able to build up your account over time and be nice and profitable, because you're not exposing your account to too much risk. Right? One lady told me, oh, I've got a starting capital of 1,000 and I want to make 1,000 every week. It's impossible. All right? I mean, let's put it this way. It might be possible. Put it this way. It might be possible, but the probability is not in your favor. And trading is all about probabilities. If you want to be probable, then you got to have a better expectation of what we're trying to achieve through trading. And what we're trying to achieve is to benefit from the compounding interest effect, right? That's what we're trying to achieve. We're trying to benefit from compounding interest, and we want to do that over a period of time. Your trading results aren't based on one big trade that you've taken. I mean, potentially, if you're taking what we call black swan events trades, like things that don't happen very often, that means you're not going to be trading very often. And those things comes around once every 2-3 years. Okay. But most people are not trading like that. So your trading results will then come from a large number of trades taken based on, of course, the right information, but also a strategy around that. And once you've executed and you executed that strategy and you calculate and you say, all right, I'm winning 60% of these types of trades, then you have a strategy, and all you just have to do is stick with that strategy under the right risk management parameters. And you will be profitable. Now, another thing that I need to mention here is these prop firm and prop challenges, especially the ones that are saying that you need to pass the challenge in 30 days, they're actually forcing you to fail. All right. The best challenges to take is when there is no time limit on when to hit the 10% that is required to pass the challenge. And the reason for that is it doesn't force you to trade. You are waiting for the right opportunities to present itself, and those opportunities may come few and far in between, you know. So there's no point in trying to force yourself to trade. And this is why we actually recommend, right, the Funded Trader Plus, because you could pass that challenge in 2 days if you want to, or you could pass that challenge in 2-3 months if you want to. There is no pressure at all on right. There's no pressure at all on trying to pass the challenge in 30 days, because quite frankly, over 90% of the people who try to do that challenge failed. Right? They wouldn't tell you that. Right? They'll advertise that. Right? They'll advertise that these people are passing, but they'll never give you the statistics. So I'm gonna drop the link into the chat for those people who are actually wanting to do the challenge as well. Oh, okay. So some of them are no limits now. Okay, FTMO is no limits now. They've changed that quickly, haven't they? Okay, they've changed that quickly. They've changed that quickly. But still, I don't necessarily even trust MFF or FTMO anyways, because they're not actually giving you a real account to trade. You're trading a demo account and they're giving you money from the people who fail the challenges. But it'll be interesting to see how the development of the no limit pans out. They probably made enough money from people who are losing to actually give you a real account now. Who knows? All right. So just be sure, right? Just be sure that you become a good money manager, because at the end of the day, that's what this trading thing is about. Just make sure that you become a good money manager. And if it's a challenge for you, then by all means, make sure that you get somebody who's registered as a professional to manage your money, right? Registered professional, not somebody who's your friend who trading and promise you all sorts of crazy returns. A professional money manager who's registered as a trader to manage your money. Nothing is wrong with that, right? If you're struggling to make sense of this thing, then let somebody else do it for you. Okay, but somebody who actually has the qualifications to do it, right? I have no qualifications to do that on behalf of anyone, so I don't. Okay, but if you are trading on yourself by yourself, you've got to ask yourself the questions: what would a good money manager do? Right. Somebody just asked to check US 30. All right. Remember, this is for educational purposes only. I'm no financial advisor. And if you want financial advice, seek a registered financial advisor. US 30 has been in a range. And we said we're going to stay clear of that. And that's exactly what we're going to do, right? This was non-farm payroll. This was the day after. This was the day after that. This was the day after that. This was the day after that. The day after that. The day after that. The day after that. There's, right? If you try to trade in these conditions, you get chopped left, right, and center, worse than Bruce Lee. So I would leave US 30 alone for the minute. Okay? Right, the market is in a little bit of a mayhem for now. US oil has been beautiful. We've been looking for the buy on that for a little bit. All right. And it's been trending up like crazy. Since way down here, we've been looking for that buy. We did have some large retracements though. But notice though, even in the uptrend, when we have a large retracement, which to me is like a stop hunt anyways, it had a big recovery. And then we had a large retracement, a big recovery. Okay. So still biased for oil to continue pushing up. The fundamentals is telling us oil is going to push up. I'm going to wait for a big drop. When the price drops off a little bit, we look to buy oil and continue in that direction. Okay. So for all the people who would have just started or are actually thinking of getting started, we usually have an onboarding session in the next 5 minutes or so. Okay. So be sure, right? Be sure to get in and be a part of our onboarding where you could ask yourself or ask any questions you want, right? Get yourself into the fold, and we are going to have ourselves another cracking week. Like last week, we really didn't have to do that much. We just needed to sit on our hands and follow what the fundamentals have been telling us. Or in fact, you know what? I should just give you a little bit of a sneak peek into some of the fundamentals that we actually did churn out. Let me give you a quick sneak peek into that. Right, so for example, when we had that Chinese news, right? Okay, so there we go. Let me share this with you, just to tell you the power of what we have here. Okay, so right here, right? So we showed that there was going to be the Chinese balance of trade and the inflation rate coming through, and right here it says any sort of decline in inflation rate is not likely to have a mixed impact on the economy. Just make sure that we didn't have anything else. All right, yeah, right here. Okay, so big news coming up. Decline in China's trade surplus is likely to have a negative impact on the Australian economy, right? And in fact, that's exactly what happens. China had a negative surplus, right? We have the sources right here, and again we reiterated that the Australian and the New Zealand should fall because of what is happening in this Chinese economy. And then you could clearly see that is exactly what happened, right? So this is the type of fundamental analysis that we do, and to make sure that we're trading in the right direction. And remember, your fundamentals is going to give you your direction. Your command console is going to give you your entries, and that's how we play this game. Nothing more than that. There's no indicator on any chart is going to give you what direction the market is going to head in. Now, you've got to do that extra work, and this is where retail traders are trying to skip that step. You're trying to skip the step of doing that extra little bit of work or reading to understand what is happening in the world around us. And this is where people get tripped up, right? So, as always, have a fantastic week. We're going to keep an eye out and be aware of what's happening. Japanese yen news coming up. We have pretty most of the major currencies, not that much on the euros, but a lot on most of the other stuff, right? So stay woke, stay away, and we're going to continue doing our fundamentals and feeding it into the subscribers on the A list. But have a fantastic week, everyone. And I will see you on the inside. Bye-bye for now.